Hey, what's up, you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I want to talk about smart money concepts, strategy, or high probability order blocks, or supply and demand zones. There are so many fancy names for it, but in general they are supply and demand zones. And in this video, I want to show you a very easy method that I'm constantly talking about on each and every video, so you can have a better understanding of this concept and you can actually understand how I'm personally trading on my manual trading account. So what you're seeing right now is Gold Incubator. So this is my EA that I started running it like a few months ago, but this is a brand new account. As you can see, we started in March 7th and today's date is March 16th, which is Saturday, but the last trading day was in 14th. And we've gained over 66.54% in profit on a brand new $1,000 account, which the profit is $654, completely hands-free. I personally didn't touch it at all. I was just waking up in the morning, seeing my profits, and then I'm done for a day. So this is my automated trading account. But I also have a manual trading account that which is my FTMO account, and I'm in the process of the FTMO challenge right now. And I'm gonna actually keep you posted for the results. That's what's gonna happen, whether I actually pass it and when I'm gonna pass it. And I want to show you exactly how I trade on a daily basis. So for example, I want to show you a very nice and clean and textbook setup on gold that literally happened a few days ago in April 14th. Yes, it was on Thursday because Friday the market was closed for Easter, and that's why nobody couldn't trade. Nobody could trade because the market was closed. So many brokers have all these pairs stopped. So what happened in April 14th at 8 in the morning Eastern Standard Time, which in my time is 6 in the morning, and New York Stock Exchange markets open at 9:30. But since we're trading gold, it's not going to affect anything. But if you're trading indices like NAS 100, US 30, you need to wait until the New York Stock Market Exchange opens first, and then you trade it, because there's so much volatility and manipulation in the market. And you know that, guys, you can go back test it yourself. So that's why I try not to trade any indices before 9:30 Eastern Standard Time. So for gold, the first thing I do, guys, if you go back and watch all my videos, the first video on my channel all the way to the latest video on my channel, I always talk about this method, guys. You just need two strategies: Fibonacci and order block strategy, or high probability supply and demand zones. These are all you need, but I mostly use high probability order blocks because they're cleaner. So the first thing, on a 5-minute time frame, you just need to zoom out to see how the trend is like. Is it trending? Is it trending towards upside? Is it trending upwards or downwards? Is it consolidating? What is actually doing, so you can have a better idea for the trend of the market. And then after that, you just need to zoom in to see how many high probability order blocks you have for supply and demand. So we have a high probability demand zone right here, and the reason is that it's a high probability demand zone is that this is the last bearish candle, and after that we had a huge spike towards upside. So this huge spike, the candle after that never tapped into this zone. So that's why there is a gap between the candle that formed after this huge spike and this zone right here. So this gap from here to here makes this zone a high probability order block, just because there is a gap here. If there was no gap, for example, let me show you. If there was no gap, so for example here, right, from here to here, because this is the last bullish candle, and then the price dropped, and we had see, this is the candle that literally dropped after this. See, this is the week, this candle wicked it out, and then the next candle after that tapped into this level. So there's no gap, there's no gap in between, so it's not a high probability supply zone, okay? But since we have a gap right here, see, from here to here, this is a high probability demand zone. So the next thing you need to do is just wait for the price to come back to this level, to tap into this level, and then you see what kind of confirmation you're gonna get from the candles. Because we have a resistance level here that is already stopped out. See, this resistance level, there's so many stop losses above this level, so it means there's so much liquidity, and all these weeks stop these sellers out, and now it's probably reversing towards the opposite trend. trend. It's not 100%, but I'm just assuming that after each liquidity grab, the price tries to reverse to stop out the buyers. After stopping out the buyers, they stop out the sellers. It's just constantly moving like that to grab the liquidity. So you don't want to be part of the liquidity. That's why it's very important to identify your supply and demand zones and then trade based on that. So I'm going to actually go forward. You see that it actually had a break of a structure because this candle literally broke above this level. So this is now a break of structure. There are two things we can do. The first thing is that if you want to combine Fibonacci level and high probability supply and demand zones, first of all, you have your high probability demand zone right here. The second thing that you can actually do is using a Fibonacci level retracement. So Fibonacci retracement levels, and where you start is very important, guys, because look at this. We had a huge spike towards upside. We had a little bit of correction, and then we have a break of a structure after this candle, because see, this is a body that broke above the previous weeks. So it means that you got to identify where it started. So it started from here and it ended right here because the correction literally started. See, this is a correction candle, and then you need to identify your golden zone, which is between 50 to 60% level. So if you want to take a screenshot of my levels, that how I structure them, feel free to do that. I'm going to actually show you the setting. This is how I do it. 0, 0.3, and just take a screenshot, and this is how I'm actually doing it. And then I just wait. You see that this candle literally tapped into this level. So from now on, you need to wait for a better confirmation, a bullish engulfing candle or consolidation or hammer or something like that, that actually show you that there's a high chance the price wants to go up all the way to here. So this is a high probability supply zone that I identified on a 1 hour time frame. I don't know which one exactly it is, but this could be our target right here, one of our TPs. But I personally don't hold the trades that long, guys. I'm a scalper. But as you can see, boom, this one got invalid and this one got invalid as well. Why? Because it has a wick outside of the box, which made this one completely invalid. So the next thing you need to do, guys, is to identify the next high probability order block. So one of them is here because we have an obvious bullish engulfing candle. The next candle never tapped into this level, so that's why there is a gap in between, and this is a high probability demand zone. Even right here, guys, this is the last bearish. This is the last bearish candle, and after that we had a huge spike towards upside. This candle never tapped into this zone, so there's a little bit of gap. Even a little bit of gap counts. See, this gap from here to here makes this one a high probability order block. So you got to see how the price wants to react towards this one right here. So it literally tapped into this level. Now you gotta get yourself prepared. What I personally do is that when the price tap into this level, and if I get myself ready for a buy position, I always take my position above this candle. Not here, not here. Put it above here, okay? And then I put my stop loss below this level. So as you can see, now my position got triggered, okay? So the safest thing to do is to move your stop loss below the box. A lot of people put their stop loss below the candle, and there's a high chance that you get a stopped out. So this box, the entire box, is the room for the price to play around, and then it probably goes towards your direction. So what I personally do is to put my stop loss exactly below this level, and then as you can see, my buy limit, my buy stop got triggered. And after that, look at this. This one literally stopped everybody out. Even I got stopped out. Even though I put my stop loss below this level, I got stopped out. So that's what I'm saying, guys. Sometimes this strategy stop you out, but there's nothing wrong with it because you're actually doing the same thing. Yeah, you're actually doing the right thing. And in this case, you can do two things. Whether you just wait for a better opportunity to re-enter your trade, or you wait for the next candle to see where it closed before you put your buy stop or sell stop. So in this case, I just wanted to show you an example that what would happen if I put my buy stop here, my stop loss here, and my TP somewhere around here. But if I wanted to wait and I saw this candle here, I wouldn't put my buy stop here. I just waited for this candle to close above the previous candle, and then I take it. So in this case, so this is invalid, and as you can see, now the price is probably trying to reach this level, but even right here we have a Fibonacci level because we have a few breakout structures, a few support levels have been broken, and this is exactly where it started, this is where it ended. So we have a Fibonacci level from here to here, which is our golden zone, so that we need to be careful. So now we have a high probability order block here and a high probability order block here, and this one became invalid because this candle wasn't strong enough to show us that the price is trying to go up. And as you can see, boom, break of a structure, boom, this one got respected. And one more thing, you have your Fibonacci level here, plus you have a high probability supply zone from here to here, because look at this, you need to take the last two candles after the drop of the price or a spike of the price. So in this case, the price dropped, and the last two candles that were bullish were these two green candles here. And if you take them together, you see that this candle dropped, and the next candle after that never tapped into this zone. So that's why there is a gap in between. So now you have your Fibonacci level here, and now you have your high probability supply zone right here. So in this case, because this is a really good candle to take a sell position, you can take the risk to actually put your sell here and your stop loss here. But again, what I personally recommend is to put your stop loss above the box, not above the candle. Because if you're above the candle, again, there's a chance that you get stopped out, but you get a higher risk reward ratio. In my opinion, it's not worth it. Just be safer. Because after that, you see, boom, it stopped you out, bearish engulfing candle, and now it's probably dropping. Look at this. But if I put my stop loss above the box, I still had my 1-to-1 risk to reward ratio trade without even having to re-enter the trade, and I could take my profit here all the way to here. See, because we have a high probability demand zone here as well, so it's almost 1-to-1 to 2 risk reward ratio. But if I wanted to leave a runner, it would be even way more. So in this case, I don't personally leave a runner. I probably take it from here all the way to here. It's a 1-to-1 trade. It's a beautiful one, and then after that I'm done for the day. That's all you need to do, guys. It's very, very simple, self-explanatory, and I just wanted to explain it on gold because all of them are the same, the patterns are the same. The high probability supply and demand zones, the Fibonacci levels, they are all the same. So it doesn't really matter which pair you're trading. I trade GBPUSD, EURUSD, NAS 100 gold, SPX, and that's all. I don't trade like all of the pairs. But you can literally practice this strategy on any pair you want. If you have any questions, you can drop your comment here. I personally get back to you and answer your questions. But and I hope that you enjoyed this video. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell so next time when I upload a video, you'll get notified fast. But if you want to trade completely hands-free, guys, you don't want to get involved in the market, you don't want to analyze the market, you don't want to be stressed out to see, okay, it's going to hit the TP or stop loss or anything like that, your solution could be gold incubator, guys, period. Because all you need to do is just to put in the money that actually you think that you can get a good return on investment, but this is what you're whatever you're more comfortable with, and then after that it gives you a percentage every single day, 1% to 1.5% profit every single day without even watching the market, guys. You don't have to do anything. You just need to wake up in the morning, check your phone to see how many trades it took, how much profit you made, and after that you're done for the day. But I'm just having these videos for purpose of education and tutorial if anyone wants to trade manually as well, and I hope that it could help even a little bit. So again, thanks for watching this video, guys, and I'll see you in the next one.